Recently, that deflation, which simply means that things go down in price, will cripple the economy. But our next guest, economist Robert Murphy, argues that deflation can help the economy. Robert, welcome to Freedom Watch. What has Ben talking about in this respect about deflation is harmful, and why and how is he wrong?
Well, it's good to be here. Yeah, Bernanke is operating under the standard theory that what happened during the Great Depression was that prices were falling and it set in motion this downward vicious spiral, and that people weren't earning income, so they hoarded their money, and then prices fell even further, and it was just a downward spiral. But the problem with that is there are all sorts of times in American history when prices were gently falling because the economy was producing more, and that wasn't a problem. So it's not falling prices per se. As everybody knows, falling prices are a good thing in general. So it's when the government messes with the economy, that's what prevents recovery.
All right, and we know that the government is messing with the economy. They've come up with this crazy phrase, QE2, quantitative easing, questionable exercise of judgment, whatever you want to call it. It's really basically, correct me if I'm wrong, Bob, the government, the Fed creating money out of thin air. It doesn't print it anymore. It just adds zeros to the ledger sheets of various banks and says, we'll pretend the money is here, go spend it. What is the long-term effect of that type of thing that he said on Sunday night is not going to cause inflation and is not going to increase the monetary supply?
Well, you're right. I mean, Bernanke was there in 60 Minutes just as a PR move. All right? Everything he was saying was calculated to keep the public from worrying, because more and more people understand you can't just keep creating money out of thin air and buying assets with it and think that nothing bad's going to happen. So you're right. He was creating money, that he writes checks on the Fed to buy these assets, and that increases what's called the monetary base. And it's very disingenuous when he was saying, oh, no, we're not printing money. Well, by any standard use, any measure, the money supply has been rising.
All the good people watching us now, when that guy, Ben Bernanke, adds $600 billion of them to the monetary supply.
Well, the obvious thing that happened, and you can see this in the chart of the dollar against other currencies when this QE2 became big news since the summer, when people are expecting it, the dollar falls against other currencies. So that makes import prices rise. And, yeah, prices in general start to rise. So it's pretty simple. You create a bunch of dollars, and eventually you're going to see prices rise. You see it right now in assets and stock market and things like that, but you're going to eventually see it in the prices consumers pay. We already see commodity prices going way up. That's eventually going to translate into prices that people pay at the store.
In a free market, shouldn't supply and demand determine prices rather than the artificial manipulation of the government? Stated differently, hasn't history taught us that planned economies don't work, that only free markets produce wealth and jobs that are sustainable?
Well, yeah, you're hitting on a great point here, and that's actually, ironically, a lot of even free market economists, they had this blind spot when it comes to the Fed, that they would be horrified if there were a government body setting the price of oil or setting the price of a car, but yet they see no problem with Bernanke telling us, well, this is what we're going to set for interest rates. They're right. We don't need to have a central bank centrally planning these things. It only leads to boom-bust cycles.
Did Ben Bernanke really, I'm asking you to get into his head, I know you're an economist, not a shrink, expect us to agree with him when he said he was not increasing the supply of currency? I mean, that just defies logic. Add $600 billion to the economy and claim you're not increasing the supply of the currency? From his point of view, what was he trying to say?
Well, again, you're right, I'm not a shrink, but I think if you look and parse his statement, I think what he would say is, no, I said the actual currency. So he means green pieces of paper. Even there, that's not true. That's up about 20% since this crisis began. So, but I think that's what he's trying to hide behind. But you're right. Right in our modern economy now, when you talk about increasing the money supply, there's various measures. But any one you look at, it's gone way up. And in terms of just the base money, the stuff that economists say the Fed can directly control, that's more than doubled since this crisis began. So, of course, he's creating money.
Got it. Robert Murphy, a great defender of the free market. Thanks for joining us.